You are in a trade. It is going in your direction. The profit is building. And then something strange happens. You start to feel uncomfortable, not because the trade is losing, because it is winning. And that discomfort quietly pushes you toward one decision. Close it early. Take the profit now. Get out before it reverses. And the moment you do, the market continues moving exactly where your analysis said it would go. Without you. Most traders talk about the fear of losing. Nobody talks about the fear of winning. And in this video, I am going to show you exactly why profits scare traders and what to do about it. Problem: cutting winners early is one of the most common and most damaging habits in trading. And the frustrating thing is it feels like the right decision every single time you do it. You lock in some profit. You feel smart. You feel safe. And then you watch the trade go another 50, 100, 200 pips in your direction without you on board. Over time, this habit destroys your risk to reward ratio completely. You might be right on 60% of your trades, but if you keep cutting your winners short and letting your losers run, you will still lose money overall. The math does not lie. A strategy that wins 60% of the time only works if the winners are significantly larger than the losers. The moment you start trimming your winners, the entire edge of your strategy collapses. Shift/science. There is a psychological phenomenon called premature closure. It is the tendency to resolve uncertainty as quickly as possible, even at a significant cost, simply because uncertainty is uncomfortable. In trading, an open winning trade is pure uncertainty. You do not know if it will hit your target or reverse. And your brain finds that uncertainty so uncomfortable that it manufactures reasons to close the trade and end the discomfort immediately. I locked in profit, so it was a good trade. I do not want to give it back. The market looks like it might reverse. These feel like rational thoughts. They are actually emotional reactions dressed up as analysis. And they are costing you significant money every single week. Core lesson: numbered points. Here is how to break the habit of cutting winners early and start letting your trades breathe. Point 1. Set your target before you enter the trade. Your take profit level must be decided before you are in the trade, not while you are watching the profit build, not when the trade is 50 pips in your favor. Before you enter. When you set your target in advance, you are making that decision with a clear head. Once you are in the trade, your emotions are activated, and every decision you make from that point is influenced by fear and greed. The pre-trade version of you is always more rational than the in-trade version of you. Trust that version. Point 2. Understand your risk to reward before every entry. Every trade you take should have a minimum risk to reward ratio. 1 to 2, 1 to 3, whatever your plan requires. Before you enter, calculate it. If your stop is 20 pips, your target should be at least 40. Write it down. This is not just a number. It is the reason your strategy is profitable over time. Every time you close a trade before it hits that target, you are undermining the mathematical edge that makes your system work. Point 3. Do not watch the trade. This sounds simple. It is one of the hardest things in trading. Once your trade is live, your stop is set, and your target is placed, close the chart. Walk away. Do something else. The trade does not need you watching it to work. What watching it does is give your emotions a live feed of information to react to. Every pullback looks like a reversal. Every moment of stillness looks like it is about to go against you. The less you watch, the better your exits will be. Let the trade work. Point 4. Use a trailing stop instead of a fixed exit. If you genuinely struggle to hold trades to your target, a trailing stop is a powerful middle ground. As the trade moves in your favor, you move your stop loss forward to lock in profit incrementally. This way you are never giving back everything if the trade reverses, but you are also not cutting it short at an arbitrary level. You are letting the market structure decide when the trade is over rather than your emotions deciding for you. Point 5. Track every early exit in your journal. Every time you close a trade before it hits your target, record it. Note how far the trade went after you closed it. Note how you felt when you closed it. Do this for 1 month, and the data will show you exactly how much money your fear of winning is costing you. Seeing that number in black and white is often the only thing powerful enough to change the behavior. Motivational close. The market rewards patience twice. Once when you wait for the right entry, and again when you have the discipline to hold the trade to where it was always going. Cutting a winner early does not protect you. It just moves the loss from your account to your potential. And potential losses hurt just as much over time as real ones. You did the analysis. You waited for the setup. You took the trade at the right time. The last step, the hardest step, is trusting your own work enough to let it finish. That is not just trading discipline. That is self-belief. And it is a skill you can build one held trade at a time. Call to action, 6:30 to 6:45. Have you ever closed a trade early and watched it run without you? Drop it in the comments. I read every single one. Subscribe for weekly trading psychology and strategy content. And share this with a trader who keeps leaving money on the table. Master your mind. Master the markets.